Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock and SoFi Technologies SOFI stock. We will start off by discussing some new Palantir stock forecasts which dramatically changed the current Palantir stock price target to over $250 per share. We will also discuss other PLTR stock price predictions that are both short-term and long-term projections, including what Palantir should be trading at right now. I will also show you the equations that analysts and I personally use to calculate a stock's fair value price to determine if we are getting a good deal when we buy that certain stock, and we're going to use Palantir stock as an example. After that, we will go over the latest SoFi stock news and how they surprised a BTS fan by giving them a free ticket, which has given SoFi amazing publicity. Go and give this video a like right now to get more Palantir stock and SoFi stock news updates. Comment your thoughts on Palantir's new price target down below. Turn on all subscription notifications to stay informed, and now let's get right into today's stories. Palantir's PLTR stock is a very volatile stock, but many positive bullish investors think that Palantir's data mining and data analytics platforms will be able to achieve massive growth in the future as they continue to sign more government and commercial contracts. On the other hand, negative bearish investors think that Palantir relies too heavily on their government segment of business, that their commercial segment faces too much competition, and that the stock price is too expensive to pay for an unprofitable company, all of which I will address shortly in this video. Currently, Palantir's market cap is around $41 billion, which means that the company is worth over 27 times this year's sales, and with this high PS ratio, it will limit gains for both short and long-term investors. This is especially detrimental because of rising interest rates and inflation, which will make growth stocks less inviting to investors. However, even with that in mind, Palantir can still deliver amazing gains, mostly over a long-term investment horizon. Palantir projects that they will bring in $1.5 billion worth of revenue this year and $4.5 billion worth of revenue in 2025, which equates to a 30% yearly revenue growth rate due to their commercial segment eventually matching or outpacing their government revenue growth. Even though Palantir's management has not given us estimates past 2025, we can still calculate Palantir's future market cap and therefore their stock price. For example, if we use the growth trajectory of another big data company like Salesforce, for example, we can determine that past 2025, Palantir's revenue growth rate will fall from 30% down to 20% for the next 10 years, which would mean Palantir could bring in $27 billion worth of revenue in a single year, with that year being 2035. Due to the law of large numbers, we can then estimate that for the next 5 years, Palantir's revenue growth rate will fall again from 20% down to 15%, which would mean that Palantir will bring in $53 billion worth of revenue in 2040. By this time, Palantir's PS ratio is anticipated to fall down to 10 rather than 27, which would put them at a market cap of $500 billion. We can now simply divide Palantir's current market cap by their projected market cap, which would give us an answer of around 12. We can then multiply 12 by their current stock price of $21.20 to get a PLTR stock price target of $254.40 by 2040. This means that Palantir is set to outperform the market indexes by a substantial margin, meaning that Palantir is a great investment. With that being said, let's go over some potential risks of this play. Palantir faces risks of government agencies building and developing their own internal platforms that can do very similar things to what Palantir software can do. Secondly, on the commercial front, Palantir faces indirect competition from companies like Salesforce, C3.ai, Tableau, and Glue from Amazon Web Services. But even with these risks, I still personally like Palantir as a long-term play due to their high intrinsic value price, which we will calculate right now. The intrinsic value is the price at which Palantir's PLTR stock should be trading at on the open market right now. This is not a prediction, it is what the company is truly or fairly worth currently. So when the stock price drops below their intrinsic value, the stock is a buying opportunity in my opinion. But then that begs the question, what is Palantir's intrinsic value price? To calculate this, we will use what some analysts use, which is the discounted cash flow or DCF model. So I don't confuse you, I will quote right from the article, and below you can see the two equations that we're going to deal with. Also, we're going to use the FCF growth rate estimate by Simply Wall Street. And I quote, "We now need to calculate the terminal value, which accounts for all the future cash flows after this 10-year period. The Gordon growth formula is used to calculate terminal value at a future annual growth rate equal to the 5-year average of the 10-year government bond yield of 2%. We discount the terminal cash flows to today's value at a cost of equity of 6.3%, end quote." And again, you can look at the bottom of your screen for the two formulas that we're using. In the end, we get $51 billion, which should be Palantir's current market cap. But then we divide this market cap by the number of outstanding shares to arrive at an intrinsic value of $25.48, which is above Palantir's current stock price, which means that Palantir is a good investment as of right now. I also want to add that the fair value of a company can move, and there can also be multiple fair value estimates. For example, depending on what method is used, you can calculate the true value of Palantir, and you can get estimates from anywhere between $25 to $31. But either way, it means that the stock is a good buy right now because the fair value price is over the current value price of the stock, or at least what the stock is trading at currently. As always, I also want you to be educated and aware of the risks associated with any stock or company. For example, look for things like Palantir's competitors, what they're doing, what management is doing with their shares if they're selling it or buying more, if their stock-based compensation is improving or becoming even more of a nuisance. So please, again, be aware of these things moving forward because this stock is very volatile. Now that we know that Palantir is headed to a $500 billion market cap and a price target of $250, we have now completed our portion of the PLTR stock analysis. So now let's talk about the latest SoFi stock news. If you have taken a look or seen SoFi's Q3 earnings report, you would have probably noticed that surprisingly, their financial services division is their largest drag on their earnings and revenues out of their three major business segments. SoFi's financial services segment contributes the smallest amount of revenue and has generated losses of between $20 and $40 million. However, this segment will actually be their most important segment in the future, and here's why. SoFi operates as a digital bank of sorts to provide a product or service for basically anything financial related or any financial need that someone may have. The best part about SoFi is their ability to upsell and cross-sell their products or services to the same customer. For example, if you have a loan with SoFi, you are much more likely to refinance another loan with them or to open up a brokerage account so you can buy and sell stocks and cryptocurrencies. And SoFi is so good at this that according to their CEO, 3 products led to 73% of their cross-selling sales for the quarter, which are staggering numbers. More good news is that because of this, their financial services segment has almost increased by 4 times year over year, and it's still rapidly expanding. So even though SoFi is losing out temporarily on the short term, it will more than pay off in the long term. Once SoFi obtains their long-awaited bank charter, which I am super excited for because it will allow them to hold deposits, improve margins, and invest into securities that generate interest income, it will also enhance their financial services portfolio, which will then increase revenues in turn, and it will also increase the stock price in my opinion. SoFi is also getting great exposure and free marketing publicity because BTS, which is an extremely popular Korean pop group, is performing at one of their stadiums. So SoFi decided to give a fan some free tickets to celebrate that SoFi has officially sold their 1 millionth ticket since the stadium was built around a year ago. This story was posted to Twitter and Facebook where it blew up, and the tweet said this, and I quote, "This Saturday at the @BTS_Big Hit concert, we are issuing our 1 millionth ticket to enthusiastic BTS superfan Harrison, making him SoFi Stadium's 1 millionth fan. Congrats, Harrison. We can't wait for you to see the show!" Exclamation point and many hashtags after that. This tweet then blew up in support of SoFi for doing this. The tweet was retweeted more than 33,000 times. I also want to add that Harrison will also be receiving free BTS merchandise and other surprises as well. I think this was a great move by SoFi, and I think it's a very cool, wholesome story, but I am surprised about how much traction this story actually got. But what do you all think? Comment your thoughts down below about SoFi and Palantir. Like this video right now if you haven't already. Subscribe if you are new, and I will see you in the next YT video.